Intel shares under pressure. The company produced a weaker than expected outlook, and it does plan to continue cutting the workforce. And it warns that it might only break even in the current quarter. Let's get more from Frank Lee, Global Head of Tech Hardware and Semi Research at HSBC. Frank, thanks very much for joining us. Can you remind us, what is Intel's core franchise now? What kind of chips are most important to them?
Sure. I think if you think about their core business, is really about the CPU that's used in the data centers, as well as in the PCs. However, I think the last 2-3 years, the focus has really been on the AI GPU, which is a market that they are really not in at the moment.
And they failed famously to get into the mobile chip market, didn't they?
I think that, that was a while back ago,
Yeah.
Where they didn't come into the mobile. But I think going forward, though, it's really about their own execution than anything else, right? Because I think, since they started to having their own manufacturing hasn't quite worked out as well as they had hoped. And I think that's one of the areas where they're still continuing to struggle with.
And do they still have massive plans for a manufacturing build out in the United States?
Well, I think if you look at what their recent strategy is, it seems like they are still pursuing that. However, they have scaled back some of their CapEx investments. There has been some market rumors that there perhaps will be some sort of relationship with TSMC, which TSMC has come out to deny. However, they have continued to have a dual outsourcing strategy where some of their chips is being made by TSMC while some of it's being made in-house.
You have a hold on the stock. You don't see a turnaround in the near term?
I think we actually upgraded the stock in the beginning of the year to a hold rating from reduced. So we do see that there is limited downside from where we are today. The stock is trading at basically near its trough price to book. So not even on a PE basis, but on a price to book is relatively low. However, we do think that there are some things they still need to work out. The new CEO Nvidia has come in, and I think he has stressed we think is a good message, which is to really focus on execution. There isn't a lot of talk about very big strategic ambitions. I think that was what the previous CEO was focusing on, a lot of bigger strategic ambitions. But the execution is, I think, what investors want to see. And so far, this most recent quarter they delivered, the guidance is a bit light. But we also believe that they could be also want to make sure that they're extremely conservative, that they don't disappoint the market in terms of their guidance. And if you look at this most recent quarter, they guided relatively weaker last quarter, but they came in ahead of what they had previously guided. So we do think that they're on the right path, but there's still a lot of areas they need to get through in terms of execution.
And does Intel have real prospects of getting an exciting AI-related product?
I think for AI, it is something that they're looking to get back in eventually. But I do think that their key priority and focus is to figure a way to reclaim some of their share. They have been losing share on their core businesses, both in data centers as well as the PC market to AMD over the last 1 to 2 years. So I think that's going to be one of their key focuses, to figure out how to reclaim some share, and secondly, how to improve or at least find a way to improve on the manufacturing process. They have talked about AI as something that they want to focus on, but I think those two are going to be the more immediate priorities, and this is what I think investors want to see as well.
Can we just switch to Nvidia? You have a hold on them, as far as I know. Why is that?
Sure. So I think we did turn a bit more neutral on Nvidia about almost a little less than a month ago, and I think that the real key reason is that we also believe that the pricing power that Nvidia has enjoyed for the last year and a half on AI, we think it's starting to peak out. I mean, what they've really enjoyed is just able to increase their pricing almost every 6 months with the roadmap they're presenting. But based on what we see now with GTC, we do think that their roadmap is some ways slowing down a little bit. I mean, it's not to say that they're losing their competitive position, but their ability to keep raising pricing and get that pricing power to deliver upside in earnings, we think that's going to be more challenging going forward. because if you think about Nvidia, one of the great stories for the last year and a half is how much they have continuously beat earnings, but that seems like it's starting to slow down. And so we do think that from that angle, you really need a re-rating story for the stock to really work from here. And we think it's not going to be easy to see, this further re-rating. And the earnings momentum is starting to peak out. Then we think, the upside to share price won't be as much as, we previously expected.
Is it really just the logic of large numbers, that their profit and revenue are so big that it's going to be hard to increase them significantly from here?
I think, the major part that we just highlighted is really, their ability to increase pricing. So, for example, when they were selling GPUs, graphics, it's only a couple $1,000s. Then they went up to 10, 15,000. So that magnitude of increase is going to get harder and harder. And so that's we think the main reason why they won't be able to deliver as much upside to the market in terms of earnings.
Taiwan Semi, if we can close out with that, you do have a buy, and of course they're a powerhouse, to put it mildly, in the chip business.
Yeah, I mean, at the end of the day, I think the monopolistic position of Taiwan Semi is still going to be unchallenged as far as whether if Nvidia continues to be the powerhouse, or if Broadcom starts to make some success on the ASIC, that all has to go through TSMC. Now, that being said, we have lowered our target price in Taiwan Semi recently on a lower target multiple. We do recognize that one of the challenges they face is that this relocation to the U.S., the reshoring, which they've already announced a $100 billion plan, that's going to have a longer-term impact on its margins. So, we do take an account of that, and so we have lowered our multiple compared to what we had previously, but we think there's still upside from the current level.
We'd better jump. Frank, thank you very much indeed for joining us.
Okay, great. Thanks.
Frank Lee, Global Head of Tech Hardware and Semi Research at HSBC. Let's have a look